Hey guys, welcome to our live analysis session. Uh, got a whole load of stuff to look at today, but one of the first things to get our minds on is going to be this CAD news that we have today in the afternoon. So you can call this like the pre-game before the CAD news. Now, CAD CHF, I'm going to start off with here. Now, you guys know my entry. I was at this wick here, and I actually closed slightly earlier than the target reach, just simply because there was no need for me to hold it for any longer because I passed my funded account with it. So that was all I really needed to do. When we look at the price action now, CAD CHF on the other side, the price has come to this demand area, which is a pretty strong area of demand. And if I sit this over here, price has done 40 pips long so far. But what my interest is right now is that we have a price cap here that the market's been using. And I may use this to get a re-entry in. Now, my only thing is that these triple equal lows here on the M1 are also out of my attention too. I'm wondering whether the price is going to take these, but as a pre-game, I do think CAD CHF is now going to do a long possibly. And if it does the long, I'm probably going to have to get the diagram for me to show you what I'm talking about. So if I get my CAD CHF retail trader versus actual trader diagram, let me do this. So I'm going to pull this up and I'm going to go back to the time frame we were looking at on the H4. All right, we have this unfulfilled efficiency of demand, which is really where the entry for a long would have come from. Now, when you follow through the trend line markings that I have, the price did very similar to what we were discussing, if not the same thing. I'm going to just take these lines off. So with this triangle here, I'm not a triangle trader. I don't use these patterns, but in order for you to understand algorithmic technology on the market, it's important to figure out what the price or what the algorithm of the market is thinking. Now, in order for the market to make accurate decisions to deceive traders, it needs to have learned quite a few years of data in order to do so. Now, the common way that retail traders have been trading for many years have been with patterns, and some still do. Okay, and as a result, and even for supply and demand, the market, as I said, is progressively learning. There are some foundational laws about how money works, which is how the market works, which will never change, which means there's always going to be trading strategies, okay, within a specific blanket of trading that will always work, which is about how the market works in terms of manipulation. And some of the core foundational rules, if the market wants to go long, it needs to entice people to go short. If the market wants to go short, it needs to entice people to go long. That enticement will always be the case. And if you think the market is going to be nice to you, you have another thing coming. If you're ever friends with the devil never always will take more than he gives. So the market is not your friend. So this is an important aspect to look at. So again, you can see the price has broken out of this and returned back in. Now, this break here would have triggered a lot of people to put sell entries right around here. And so you can see that the price hung around here on Thursday for most of the day, hoping to gather as many entries as you can. And if I go to the H1, you'll see, if you want to understand the price a bit better, you'll be able to pick it up from this angle here. On the H1 here, this is the break of this triangle. So thinking as a retail trader, if you're trading this pattern, which I hope you don't, when the price broke out of here and was basically touched back at this area, there was a very large accumulation in this blue area right here. Let's put this here. If I go here and I zoom in here, you can see that I could even draw a little mini opposite kind of trend line here. Over here, there was a large accumulation of sell orders for definite. And the reason is because this pattern here is something that the market recognizes that people will be looking for a sell trade on. And they may not be wrong because the price does need to come and fill this unfulfilled efficiency of demand down here. However, in order for there to be that sort of movement, there needs to be enough manipulation of traders first. And if you see this candle from the H4 might not make too much sense. It just seems like the price is going long. But if you look at the wick down here, I'm going to use another color to lay this out. I'll just use a lighter color like an orange or something so that you can see it. So if I grab an orange color here and I hover over this point right now, you'll see from here that with price action, the market actually made a leg down. And it wasn't for a short period of time either. For at least, and I'm going to go from Friday, you can see that from this point here, from all the entries that probably happened, we had 1, 2, 3, 4. If I just drag this line onto the point, we had about 7 hours of bearish movement. Now, it's only 12 pips, but if you were trading this short and you caught the other side of this move, you'd be very convinced that the price is actually going short. And if you look at this carefully, the price was looking for the real market, which is how money works, was actually looking for demand. So in that one movement here, from here to here, the market was able to convince people to continue going short, since the market has even if you didn't trade the triangle, the rules of a trend line here, this trend line here, the price has broken the trend line. So when the price breaks the trend line, comes to the other side for the retest, as it's called, the price should be going short. All right. So the traders are not wrong about the short, but it's just the timing of it. So you see within 15 minutes, this wick here is everything you need to do. Within a 15-minute period or 30 minutes, all of this 7 hours of people holding a sell have all been stopped out. Within 45 minutes, anybody who sold from yesterday has been stopped out, because these 3 candles here represent 15 minutes each, so that's 45 minutes. So what people have been holding on since yesterday, so about, let's say about 15 to 16 hours, in 45 minutes, everybody's been stopped out. Especially if you look at the time here, the people selling are US and Asian most likely, or even London, but you can see from here 12 o'clock until about 5:30 in the morning. So all the Asian and US session people in the sell possibly could have gone to sleep, leaving their stop losses somewhere here and then waiting for the price to, do its thing. And as you can see, price has broken right way past it, is continuing long. Now, if you're following the liquidity flow of how money is actually moving in the market, so if I go CAD CHF here, go back to the H1, and I just go a little bit back, you'll see now I've already got some markings. That one says H1 demand zone number 2. This is the first primary demand zone that price has been working with, okay? We had a very strong long come from this region, and then price returned into the same area again. And this is the current area of liquidity. So the current concentration of where demand liquidity is right here. And that's why I'm saying that my concentration is that CAD CHF could possibly give us a long. Okay, it could be a long that's temporary until it takes, for example, these equal highs, because this is a liquidity pool, and then go short again. Or the price, may take these highs, which I've been looking at, which from here are the highs of January, and maybe get into this area of demand before giving us a short. There's a whole range of things that can happen. So for me, the zone I've been paying attention to, there's a H1 version, but the M30 version does fine. The reason why I like this supply zone specifically is because it held the price, beneath where my arrow is on the right-hand side for most of the day. It was the highest price point kind of area range to reach in that day. So now that price has broken past, I'll be very happy to take a sell trade on the return. My only problem, I'll say, and this is my thoughts, is that, okay, on this chart, it looks completely different from IC markets. On IC markets, these 3 lows are actually equal. But over here, it's saying that we actually don't have equal lows. We have a swing low. Now, equal lows, not the second part. So on the M1, all right, we have this demand zone over here, which is probably where I'm going to take the entry from. I want to get an entry like something like this, and then I'll go for a long, like pre-news, and see what happens with it. Now, I do see there's a liquidity gap down here. If the price will fill it before the news, I don't know. Now, with the CAD news, the price is notorious for spiking, so I may not get in whatsoever and wait for the news to actually calm down. It really does depend on what the market offers, okay? If you wanted to be a bit more specific with the zone, you could actually use the 15-minute order block, which is a lot more smaller and slightly more potent. And if you do the same price action mapping, then you can see the price is really at the edge of the zone. So you could put your stop loss about 3 pips down and the rest is profit. So I may do that also. Okay, that's another idea I have moving forward. But I've set an alarm. We'll see what happens. I mean, CAD CHF is a Euro London session / US session pair. So entries can come now all the way until 1:30 and even beyond. But I know that this news will definitely be drastic. If you haven't seen a previous video, you could take a quick look. It has timestamps on it so that you can have a check to see, when I was talking about CAD CHF. So coming back to CAD CHF now, paying attention to what's happened, this is where my interest is at right now. Another pair that I'm actually interested in is USD JPY and CAD JPY. They both have done an interesting movement where they've spiked down and spiked long again. Now, if I draw this supply zone here, which is my second trade, I still didn't take this yet because we've left a few highs. I want the price really to get into this area here and go short. Now, there's a little bit of a conflict of interest now because back to CAD CHF for a minute to explain. If the price goes long, it's possible the long could also go to a certain limit and then we could crash down short again. Because if I come back to this, these markings I have here, the main idea and objective of the market is to get you into a position too early or completely go the other direction. Now, there is a reason for a short. There needs to be a short back to this demand zone at least. And what the market could wickedly do is possibly push along just ever so slightly and then push short, or before the news hit an area of supply that's strong enough to sustain a movement. Because right now, let's say, if you're following the upper trend line now, and the market is evil like this, and let's say you are looking for a short anyway, the market could also do something like this and come back somewhere here, maybe slightly higher as an enticement, and then go short, okay? So everybody that's following this short was thinking, oh, the price is breaking above, let's put a buy stop to go long, and then the price goes short. Or the market could decide to actually entice people and actually respect this trend line just temporarily until it reaches here, and then all of a sudden there's just a massive kickback the other way. So those are about 3 different options that the market could do. Which one is going to happen, I guess you'll see closer to the time. Probably wait till 12 to finally know, but for now, still there is still good opportunity to work out what to do. But with CAD CHF anyway, the price has done pretty good when it comes to a short. Now, this movement seems pretty random, but it isn't random. The market is lining itself up for a very strong short to come on CAD CHF because the lows of the NFP down here, NFP news, I told you, have to be taken. So I'm looking out for what's happened. But because on the 5-minute, 15-minute, that these highs right here are purposely not returning to principal supply, I'm not touching it. The price should enter into this blue zone here. If it did, I would have taken it. But since it's wicked here, I'm not going to trust it. If I go to the 5-minute, which I'm on anyway, and we just look at supply liquidity and demand liquidity, this supply zone here was instrumental in this strong short we've had this morning. So this strong short here, the price used it to go short and has broken above and returned to the other side. So this will be a great instrument to use to see if price is actually going to reach here. If it does, I'm just going to put an alarm near the wicks. Then I'll probably put a small sell entry here, stop loss above, and see how the price fares out. But because of the CAD news, you can see the market is starting to move quite dramatically already. So that's CAD JPY for you. Now, USD JPY has followed suit similarly. Now, the USD JPY is a better trade, I think, because of how it looks. My only issue with it is that these highs here, so if I hover over the first high, we have 132070. The second high is 132065. So not exactly equal highs. Graphically, it does look like it. All right. Now, this is on another funded account. So I'll pass my valuation. I have another account that I'm going to pass here. I'll probably pass it today, hopefully, with the trades that I've got. But nonetheless, this is another account. Now, the price, we have to look at USD JPY, which is related to the CAD news as well. Canadian dollar news does affect the US dollar, which is why I'm looking at it. With USD JPY, as I said, with other Japanese yen pairs, we're still in a phase of very strong longs. If you go to the weekly time frame, just to kind of recap quickly, then I'm going to go through pound CAD. We have this zone right here on the weekly, and if I go to the monthly here, you will see what I'm looking at. On the monthly, we have this area here of demand that price is within. Now, what I would like to have seen, to be fair, is for the price to have done a monthly inductive move, because over here, the body of the candle has still closed beneath the previous month's low. So January's body has closed beneath the body of December. So it's not a complete inductive reversal move, but it's the price is acting that way on the weekly. Now, when there's a major reversal movement that needs to happen, I do like the weekly and the daily to monthly to align. But in this situation, I can say that with the weekly, the price is in the maximum zone you can get to. If you look at the weekly and I zoom out, this is the last demand zone over here on the left before price. Basically, there's a liquidity void onto about 115, which is about 1,000, according to this, 1,270, 25 pips away. 1,000, let me get that number right. I think 1,000, let's read it one more time. 1,250 or 262 pips, something like that. But at least over 1,200 pips, which is a very far drop. Okay, which I don't see in the especially with what we've been discussing about the US dollar and inflation. It's highly unlikely that the dollar index is going to crash down unless it's returning one more time before the long. But in light of inflation and fundamental narratives with inflation, the dollar is going to continue to become stronger in an attempt to curb inflation. So for me, the weekly trigger over here is good enough. Okay, I'll ignore the monthly in this case, not ignore completely, but just the weekly is also quite strong to be able to make judgments on. Now, on the weekly standpoint, another thing to pay attention to, why I think we will have a short, but it won't last forever, is the weekly supply zone that initiated this movement back into this demand zone area here. And I'm going to take this off for now. So let's take this area off. This supply zone that initiated the move here, I'll use blue to represent supply here. So let's just take this off. Let's put sky blue. If you notice this week, the body of the candle, now we don't know for sure, but the price, at least the open price for this week has opened above this zone. And of course, we know, or if you've been looking at the markets, that this week market open for me Sunday night at 10 o'clock. So last week, Sunday, the market open was about 100 pips of a gap for most Japanese yen pairs. They all gapped up long before returning to close those gaps later on. So this open price here and the market showing a body over here, no matter what we can say, the body of the candles clearly closed above this supply area, which gives us a very strong signal that price is looking to go for a strong long, which means that this USD JPY short that we're having really is the last return back down for entries before price starts to proceed for a very strong long. So coming down to the daily, what can we do? We can map the price from here. We have a daily induction right over here. And we have support and demand. If I just take a color here, we have support and demand zones all across here. You could use this lower down one if you want. If I take this over here, to use this lower down demand zone over here. Now, I'm not writing any markings. I'm just speaking so that you can have a look at what's going on first without the writing. All right. Now, over here now, if we pay attention to what the market has just done. So we've had a strong wick here as an initiation short. On the H4, it's pretty clear that there's a lot of supply pressure, okay, over here. And the price has just returned to a zone of supply. This is one reason why I think I will take USD JPY short today, because all I want to see is the price really hit this target of 128. Now, these lows over here, they're not a concern, but they look close to equal. So the first H4 low over here is 128.085. And the second low is 128.084. Now, my entry I took, believe it or not, I took an entry right here as soon as the market opened. I kind of incepted, well, I would say that I knew the price was going to get here and go long, and I intuitively knew so. So as soon as the price took this low, I had an entry here. I'm going to see if I can get a screenshot of it and show you the actual entry I took on the account. If I can find it, I'll grab it for you. It's on January. I took the entry and I closed it somewhere here. I took a few entries actually. Okay, and this was this movement here was the initiation. I remember this was the Japanese yen interest rate decision. But anyway, these pull of equal lows here, I do think that there is one more short to happen, and it will happen within probably this Canadian dollar news. So with USD JPY, looking for an entry there. I'm looking for zones that can be used to be taken. Now, the supply liquidity, the actual driving force for this movement is over here. So if I draw this white area here, I'm going to do this. So we have a break of market structure here. I'll mark this out. All right. So market structure break is here. All right, so it's a type 1 stop on, so I'm going to put type 1 D1 stop on. So move. Okay. Now, really, in a simple trade like this, all right, maybe I could make it a little bit more dynamic. So I'll just, yeah, all right, I'll do it from here. So this purplish area, or lilac area, really is just H4 supply. So I'm going to type this out, H4 supply zone. All right. So this is the H4 supply zone right here. Now, even though the price has taken the low of the day, my interest is actually in the short, not the long yet. What I do want to see from the market now is just a final return. What we need now, I see a pool of equal highs over here. Let's put this right here. We just marked them out on the 15. So we've got over here, we've got the first high is 131634. The second high is 131634. So definitely, most likely with the new spike, if it doesn't happen beforehand, and I'm going to leave an alarm nearby. I always said I'm going to do some custom alerts because honestly, I hate the sounds. But if I do this here, I'm going to put, I'm going to put this here. All right. So if I put this here, my idea is to get an entry right over here. So price at the moment is hanging around within this intermediate order block for of demand. So I'm looking for an entry right here. As soon as the price reaches here, I'll be looking for the price to short down. And my target here for this trade is going to be exactly down here. I may even be cheeky enough to hold it here. Now, for me to pass my funded accounts, I don't really need to, this funded account anyway. For me to pass, I don't really need too much more, but in essence, it will be still great to kind of finish this off. So using a risk management tool now, because of these highs that are equal, I will be careful. I will take an entry for a short, but I'll be watching to see if the price over spikes a little bit to about here, and then I'll take the short, because the market can be mean like that in situations where a trade might be obvious, especially because in this case it does look like an obvious sell because the price is pulling back pretty strongly at the moment. So there may be a lot of traders who have sell limits here or somewhere nearby. So when the news comes out, the market may decide to come up a little bit higher and get to about above these highs, which is about not too far away, but another 29 pips. But it'll be enough to stop out most traders, because the average pip size I've seen for most traders, just from my own research, it doesn't mean that's what everyone does, but it seems that everybody uses a 30 pip or 20 pip stop loss. Personally, I'm more down the 10, 5, or 15 sometimes. I do larger. You know, in some cases, you know, there's a necessity to keep your stop loss slightly wide depending on the style of trading. But in general, I like to have like 5 pip stop losses, 3 pip, and use like M1 entries. But in this case, I'll keep my eye on it. This is a great entry, maybe not that obvious, and maybe the market might just allow for it. But definitely, I watch these highs as well. If the news spikes here, the news, because also remember, guys, we have another high impact piece of news, which is more hidden and it's still high impact, probably not focused on as much, but we do have the 3 p.m. news, which is the Michigan Consumer Price Index sentiment. And that piece of news, you know, is a friend of mine, a trading friend of mine who talked to me about, a good friend of mine. When he first introduced me to it, I didn't really pay attention to it because, to be fair, I just didn't understand what it was, and I didn't take the effort to find out about it. But the Michigan Consumer Sentiment does mean a lot to investors, and therefore, and it is because it's a Michigan, it's dollar news, and it does cause the market to move. I've had some really good positive direction added to my trades when I've stayed in the news or taken a trade, you know, just before or just after. So I think it's something to pay attention to, and I will watch out for. And that might actually help USD JPY to get a better boost to go for a short. Now, if the price decides to just go from the swing low down to a short, I won't be upset. But watching these equal highs at the beginning of the move is not by accident. These moves are here. So I'm suggesting that either an entry from here or just above here, around about here. So I guess from my entry is actually 35.7 pips. One of those positions here would be where I'll take a sell from. Now, we'll have to see with the market if it's going to get here and then spike above or whatever it's going to do. But of course, keeping the risk management tight will be good. Now, with this account, if I do an entry from here, So let's go down to the 15. So if I get an entry from here, which is where I'm looking for, my stop loss is above this wick here, then I mean, risking 2% for me will put me at 1.27 lots. And by the time way before I reach the target, I should be at, you know, a reasonable sized amount of profit. So I'll be looking to take a trade like that. And of course, if I want to put my stop loss above these highs just to be sure, then I'll be risking about 0.50, and then that'll put me in a position where still be good profit. If I reach all the way down here, be about 1,400 and whatnot. So that would be pretty good for trades either way. So I want to see what happens today. I think that's my focus for today. USD JPY is my trade of the day, even though it's not a CAD pair, but I'm sure the CAD news will definitely have an effect on it. So I'm going to actually leave this further at the front here. And I'm going to put the markings out properly later on. So I'll be watching to see what happens. Now, the final pair that I wanted to look at with you guys is pound CAD. So pound CAD is an interesting one because on the D1, we've talked about this before. And again, if you're not too sure about any of these, I'm releasing this video as soon as possible. So it gives you a few hours to look at the previous video that I made this week, Wednesday. Yeah. So recapping on why I'm looking at this trade. So on the D1, starting from there, we have a very big supply zone here. So price use this area of supply to go short from the beginning of May all the way down until we had a break above here, November into December. So this is a 7-month long supply zone, and it's still actively being used because price has broken above it, returned into this area, and then dropped one more time. Now, instantly when I see that, I will have to judge whether this is going to be the price giving us lower lows to go for a short, or if there's a long in play. And to me, I do think there's a long in play immediately. One of the things that are important when I look at this chart is we have these supply areas here. We have equal highs right here. So since we have equal highs right here, or very close to, if I go to the D1 and just hover over, the first high is, whenever you see these are liquidity pools, which are like magnets in the market towards the price. And at some point, the algorithm of the market would want to have interest to take those highs. So first one is 1.66903. The second one is 1.66926. So near equal highs, excuse me, not equal lows, but near equal highs, but not exactly equal highs. But just looking to the left already, there's a supply zone here that is without a return and is quite a key area of supply. All right. And I do think that the price definitely would want to get to this area at some point. But in order for that to happen, there's going to need to be the correct amount of induction of people. Now, when you look at this market here, immediately, without having any understanding, and I'm not going into deep depth, but just not having any understanding about supply or market manipulation and algorithmic movements in the market, which I'm so blessed to have. If you just take the chart for what it is, we have an A swing, we have a B swing, we have C. Some may even consider this as a D, but looking at the price as it is right now, some traders will probably be looking to sell pound CAD maybe down to the next level because it does look like an A, B, C, D formation. If you're not too sure what I mean, I'll quickly mark it out. So if I put some labels here, if we took the first and highest swing from the most recent price action here, we have A, and then the price has done a B. And as I said, the market is a master of deception. I want you to know that. And if you look over here at the C swing here, so we have A, we have B, and we have C. So A, B, and C, immediately the basics or foundational interest about when it comes to market structure is that you should be expecting a C to D. And this news will make a perfect round for it. Now, if we take it a bit further and have a look, even as a supply and demand trader, on the H4, the price is in supply and it's already selling off. So you may consider this as an entry, okay? So bearing that in mind, what do we need? Now, for me, when I saw this trade, I like it because I see this induction, the price took the previous month's low, okay? If I open, I'm going to steal this chart for a minute and just put another pound CAD on here really quickly. So putting up another pound CAD over here, I'll keep the supply flip zone here that we're looking at. All right, so let's go over here, draw this back. So if I go over here to this supply flip zone here, all right, so the price is taking the low. Okay, I don't like the strong straight line because sometimes it's a bit hard to maneuver things. I'd rather use this instead. So if you look at the price taking the previous low over here, then we get over to the H1. Let me put this here. Yeah, so if you look at it, we get over to the H1, H4, and then the H1. We can see that price has broken market structure quite a bit already. Now, the last swing, if I stay on the H4, you see the last swing high before the price took this low is over here. So the concentration of price would be over here. The algorithm of the market will be concentrating on here as a key point to show the change in strength. And you can see over here, we have a little inductive move on the H4 that produced a long. And this is, if I just go over here, immediately you see what happens as soon as the price gets above this high. We have a little bit of an accumulation or a range, and then the price takes off before resultantly coming down. So in essence, what we need in order for us to get a trade going, I'm just put this here. What we need to do to get a trade going would be for the price to return. Now on the H1 here, there's a lot of options. The easiest option would be from the demand that we can see. Now this area here, the demand is pretty weak. So you can actually, as a rule, you can at least use the last 2 or 3 candles, because this last candle here, there's no liquidity within the zone. It's really the last 3 candles. So if I draw this line across here like so, this is really where you could say, all right, price could come into this area of demand. Equally, and not I would say last, but not the least of all, the price could actually just return to demand here. If you look at price action from this perspective, it will help you to understand pricing. Now, when you look at the pricing in this market here, the high over here that the price took, you can see the return that we had. This wick right here lets us know what everything we need to know about the price for a continuation long, along with this high too. However, the demand driving this price, which is more important to me right now because I'm looking at I don't have a bias, but I am looking at the demand side of the market here. But if we look at the driving force of price, we can see that the price didn't return to this demand zone. And this demand zone is very strong simply because you can see how many pips were created within that hour. There was 60 pips within an hour, but price continued to go along, had a bit of a struggle. We have this kind of final movement, but if the price had returned to this demand area, we could have had a stronger long. So my thoughts are at the same time is that price could very simply do this and return to this zone as a return. It could take the low of this zone over here, which is the low of the day. So do some sort of spike, either come into this area and go for a long. But these are the major 2 options. But the entry area, now for me, in a case like this, I would have to go down to lower timeframes to look for deeper understanding about what the price is doing. As soon as I do that, you can trace demand a bit better. For example, on a 30-minute, we have this demand zone, which is the leading liquidity for the long, and price at the new day return here. And then we can see from this demand zone, price return here. And you can see the pattern, but there's still a lack of return on the 30 minutes. So already 2 time frames, and I haven't even gone to entry time frames yet, are confirming that this is most likely the area that price will come to next to find demand, because it's the last place that price really left strong demand at. Even though we have price action here, we have a strong mixture of bullish and bearish candles, which indicates that the demand side of the market is stronger, but not the kind of movement that you're looking for when it comes to long-term trend line, okay, or long-term trend. I don't like to use the trend line because I don't trade them. All right, if you go to the 15-minute, we could get even deeper and say the price may come here, but the 15-minute still confirms the exact same thing. So I'll be looking for an entry here more than over here. What I would do is put my entry here. I don't want a stop loss of 31 pips. It's not necessary. I would actually look for the stop loss maybe at the low of this day, which is 26 pips. And in a case like this, I don't mind having a stop loss that large, because the targets, at least, first targets, there's a lot of targets we could go for. My first target would be even this H4 supply zone that's just sticking out here. No return to it, nothing at all. Price was heavily in supply, so it just dropped. And even from that point, that's 432 pips. So there's quite a few options when it comes to what pound CAD is doing. That's why I'm excited about this news. So, recapping over everything we have, there's a plethora of trades that we can actually go for. And I'll be watching to see what we can get with all of these. I'll be watching and seeing what's happening. You know, we have CAD CHF returning already, which is interesting as well. And yeah, I think this news this week is going to be pretty profitable. It's been a long time coming for the news to come out, but I would love to see what the market is going to deliver us today. And we'll be watching out throughout the day, and I hope you guys are watching out throughout the day. Now, in terms of other pairs, I'll be fair. There are other things going on with other pairs, but whilst the opportunity is there for volatility to be higher, where you could get, you know, already you can see CAD JPY to explain the point has already done in 1 day. It's already done from top to bottom. I'll start from here. So it's already done approximately, and my line is not on the wick. Let me get to the wick somewhere here. Let's just say I want to get the exact point. I have to. There we go. So there we go. Let's be a bit more accurate. So from top to bottom, we have 136.2 pips. Okay. And then that's from Asia to the beginning of the London session, or around the heat of the London session, around 8 o'clock. And then from 8 o'clock now to where we've been, we've had 123.9 pips back up again. So in a day, if you traded this correctly and you're some sort of amazing robot, if there's been about almost 300 pips within before even 12 o'clock has hit, which lets you know that there's a lot of liquidity and volatility flowing around in the market right now. Now, that alarm, I believe, is for CAD CHF because of its pullback. Now, as I said to you, I may not take the zone because there's other places the price could go. Let me turn off the alarm. But I will be watching out to see if that M1 zone works. If it doesn't work out, then we'll just try again with something else. My idea is to get into this area here, but we'll see for sure. I won't say for sure if I'm getting in. But if I do, I'll definitely show it if I am. There's nothing to hide at all, just like with all the other trades. So I'm watching to see what's going to happen, and it'll be interesting to see what the market does from this point. So for now, and if you're not too sure about the news or what I'm saying whatsoever, because I was going to call it a day, but I just want to show you the news one more time so that everybody's clear. All right, so let's go for FX Street. Let's take a look at what's going on over here. So if I go to FX Street one more time for you guys, let's put this out. All right, so FX Street is loading. I don't know why it's taking long. It says waiting for FX Street to connect. So we're gonna wait for Mr. FX Street to, okay, there you go. He's decided to wake up. So looking at what we've got here, again, I told you that whichever way the news goes, this is a very drastic difference between the previous and the consensus. It's almost 7 times less. So something is going to happen. We just need to work out what it is. Along with, I mean, the unemployment rate is not too much of a situation, but the net change is really a big thing. December was 104,000. They're expecting January to be 15,000. If this number comes out to be true, the Canadian dollar is going to definitely drop down quite negatively. And I know I did say there was a potential long, but I do think that there could be a long spike, to clarify, not just a long, but a long spike and then a short, or price could do a short and then a long. Okay, I still think that Canada it's going to be a great country to recover soon, personally for me. Not now though, when inflation kind of levels out, but for now anyway, I do think that the Canadian dollar news is probably going to produce a negative result in general. So pound CAD, I'm expecting it to go short, which means, well, excuse me, other way around. I'm expecting pound CAD to either go long and break market structure further up and then return short. And then because it needs to, as we've demonstrated, for it to be able to go for that long version that we're looking for, the basically reversal entry to go for a long, it's going to have to return at some point. Okay, and if it does return, the pound versus the Canadian dollar, think about it with me for a minute. If the pound is stronger than the Canadian dollar, then that means that the pound versus the Canadian dollar, for £1, you're going to get more Canadian dollars, so the price will go long. And if the Canadian dollar is stronger than the pound, then it means that you'll get less Canadian dollars for the same £1, so the price will go short. And that would mean that CAD Japanese yen would actually go long and not short. So there are causes for the reasons why both of these pairs need to go short and both of them need to go long. But which one's going to happen is going to be quite interesting. Same as CAD CHF. There's reasons CAD CHF needs to go long and it also needs to go short. All right. And I get closer to the time, I'm going to start doing lives again like I used to on YouTube for you guys, so that we can have a look at the market just a few moments before, because I'm sure a lot is going to change between now and at least 1 o'clock GMT time, or even 1:15. So we'll take a look at it and see. I mean, for me, I still think that it's going to be a tricky one. I do think that the price needs to go short, but it going short, there might be a spike long to go with it. But I do think there will be a spike. I don't think the market is going to be that nice today. So I'm going to well, we all should be careful with how we trade it. So that's that news. And then we have the Michigan consumer sentiment. Now, a number above 50 is positive. A number below 50 is negative. I'll probably do a deeper breakdown as to why that is exactly. If not, watch the previous video I made about it, because I discussed it in the news section. But previous is 6.49. They're expecting it to be 65, which is bullish for the dollar. If it's worse than expected, then that would help USD JPY to go for a short. So add into our technical analysis. And as I told you, before they make a judgment about the news and release figures, the figures are released. Now, things like consumer sentiment, there's no control over things like that. I want to put that out there. There's some things that are not things you can just calculate by money. You know, the consumer sentiment is their sentiment, you know, feeling sentimental comes from feeling. What are their thoughts? How are they feeling about the market? They can't really control that unless they literally skew the results on purpose. Then, yeah, they can. But then there's other pieces of news, like I talk about, like, let's say, interest rate decisions. Interest rate decisions, they know the interest rate they're going to decide on before they decide on it, using figures and looking at the markets themselves. So it wouldn't be smart for you to wait for the news before you take a trade to try to scalp the news without looking at technicals, because money moves in the market first. The news just confirms which way it was going to go anyway, or it provides the liquidity and volatility for it to happen. Okay, so let's see what happens. The market is going to be very active all the way until, I'm guessing, 6 or 5. So there's opportunities quite for, you know, in my training as a trader over the years, I used to avoid Fridays, because Fridays was like the dead day where you could lose all your great gains from Wednesday and Thursday. Tuesday I did as well. But now it's not like that. Friday could be the best day of your life as a Forex trader. So let's see what happens in the afternoon. I'll catch you guys later. Make sure you like, subscribe, comment, share with everyone. And I'll catch you guys in the next video. Take care.